And so for the very last panel of ETHDam, we've invited some people, some of them local, some of them part of larger organizations, so to say, to come and have a discussion about funding in the blockchain space. So if this is interesting for you, which I'm assuming as you're sitting here it is, then please ask questions and engage. And to kick this off, what I'd like to do is invite Robert to the stage, the moderator, and let's give him a round of applause.
Yes, it works. Okay, thank you. Thank you for coming here today. As JJ mentioned, we're here today. We're talking about privacy, all of this conference. We're talking about new projects being built, but you need resources, you need support, and you need outreach. With that, I'd like to introduce our speakers for today and call them forward, please. Rene, Aron, Pim. We have for you today. We have three VCs for you who were able to join us to talk about what they're doing in the state of the market, what they're looking for, but also what you should be looking for. With us today, we have Aron van Ammers, CTO of Outlier Ventures.
Hello.
We have Rene Darmos, managing partner of Moonhill Capital.
Hello, everyone.
And we have Pim Swart, principal at Maven 11. Yeah. I'm going to sit with you, and I'm going to ask you guys to give you a moment to explain a bit what your fund does and how you differentiate from each other. I'd like to start with you, Pim, on that side. Yeah.
Thank you. Yeah, Pim, I work at Maven 11. We are an Amsterdam-based fund. Maybe that's differentiating. I don't think there are many Dutch venture firms in the space. We've been around since 2015, so also one of the names I think that has been around a little bit longer. Have been mostly focused on infrastructure investments, but have also done DeFi investments along the way. And I think generally have built a strong thesis around modular chains. So we're seeing that come to fruition. Obviously, we've seen Celestia launch a few months ago. We're seeing now the sort of L2-centric roadmap of Ethereum. And yeah, I think that's sort of the key directions we've been investing in. And we mostly invest in early stage ventures, but we can also do later stage. I think that covers a lot, at least.
Thank you, Pim. Rene.
So we, like a Moonhill Capital, we arise from the community. We have managed together and nurture the biggest and most active Web3 investors community out of Slovakia and Czechia, where I'm from. The community is called BitCoach. We started investing in 2017 already. We had nice investment like seed round with Chainlink, Polkadot, Avalanche, OneInch, and some others. But back then we didn't have any legal entity. It was just pure Wild West, copy-pasting transaction into one shared Google Sheet. It was a really nice time back then. But yeah, but then in 2021 we established Moonhill Capital, and since then we invested mostly into DeFi infrastructure projects. Still we're doing infrastructure, but already now looking a lot into application because there's too much infra being built for non-existent applications teams. And we'll try to be as early as possible. The ideal stage we like is usually seed. Our investing starting at 50K, but we don't like that much, and we are able to go up to 500K.
A young founder in the audience. Yeah. Aron, please, about Outlier.
All right. Yeah, I'm Aron van Ammers, CTO and founding partner of Outlier Ventures since 2014. Actually, we're not a VC and we're not a fund, so that's great. But we're an accelerator, so it's very similar to what a VC is. So we're the #1 accelerator in Web3. We run 3 cohorts every quarter. Usually with partners. We've partnered with previously with Polygon, Polkadot, Filecoin, many other players in the ecosystem, as well as more industry-focused partnerships with the likes of Farfetch and Walmart. We have done a cohort with and others. We like to run thematic cohorts, so we're now recruiting for our Q2 in a deep in program, real-world assets program, and the AI crypto program. We're really looking at that overlap of AI crypto, which we're happy to see that the market now takes on. We've been shouting this from the rooftop since for a while, but now it's great to see that people see that AI needs crypto and crypto needs AI. Yeah, well, our stage would be like even earlier than yours. Usually, I'd say pre-seed. Some founders, good ideas, some basic products, some basic traction, we get over 5,000 applications a year, below 2% acceptance rate. So we get to see a lot of the market early on. Of course, with we want to make teams as ready as they can be for funding rounds and finding investors. So we cultivate our investor network hence have a view of the market in that sense as well.
Thank you. And I've actually come around one of your portfolio companies, which we met yesterday at this conference. Hira, there's one of the founders is here, Hira from Plurality. She actually went through one of the programs. Hira, what was your experience in this program from Outlier? Yeah.
Mic, otherwise I can't hear you.
Thank you, Aaron. So just like many people here, we also went to a lot of hackathons last year, won a couple of them, and then somebody from Outlier Ventures contacted us, and we were in their accelerator program. Funny thing, we just graduated 2 days ago, so like perfect timing. I would say the accelerator was like the perfect choice for us because we were 3 technical co-founders, and when we started this, like we knew all about the technology and stuff. So I've been working as a blockchain architect for a couple of years now in Deutsche Telekom, and I thought like, I'm an architect, I know this stuff, I can do it. But when we got into this accelerator, surprise, surprise, there's so much that goes into like making a startup really start that no one person can know it all. So like there's legal, there's technical, there's marketing, there's brand placement, there's your pitch, there's your value proposition, there's your business plan, tokenization model. And like the first few weeks we were like, bah, okay, this is probably too much, we cannot do it. But as the weeks went by, one by one, we tackled so many things that now, when I look back for the last 3 months, I think we have covered more than a year's worth of progress in just 3 months. And that was like, I would definitely recommend Outlier Ventures Accelerator to anyone who can get a place there. The one thing that I really, really liked was that, maybe many of you here have seen me with a small baby. I'm the woman with the tiny baby going on around this conference. And I told Outlier Ventures, like right from the start, I have a small baby. It could be like that I might attend a few sessions with her. And they were so accepting. And I actually did that. And everyone there was like made me feel super comfortable. And I think that's what we all need to do, because like probably I can't see a single woman here. Oh, maybe 1 or 2 or 3. Yeah, okay. So like we're like less than 5%. And if we don't get that kind of support, then I think these 4 or 5 or 6 women would also just go away. So I think Outlier is doing their part. Maybe the other VCs, try to give women founders a bit more chance as well. So yeah, thank you.
Thanks so much, Hira, and thanks, Robert. I mean, I have to say to everyone, this was not my idea to ask somebody to talk about Outlier, but yeah, thanks so much.
It's always good to hear from an actual founder who went through a program. Having said that, of course, you guys, of course, Rene, Pim, you also offer support for founders, of course, beyond just funding. And that's actually what I wanted to ask, and then we'll also jump into the questions by the audience as well. Could you describe the role of a VC in this day and age from your perspective, beyond just the money, basically?
Yeah, I think it very much depends what sort of fund you work with, and also as a founder, what you're looking for. There's a very opposing views here. There's a Slow VC, it's an American fund. They have this thesis, we hate value adding, because their whole point is we are a venture capital fund. We don't know shit about being an operator, basically, right? You are the founder, you have domain expertise, you sort of know what you're doing in that sense. We know how to raise funds, and we can help you raise funds, and that's sort of our core expertise. That's not how we like to operate, but I can see that that's like a valid way to sort of approach the market. Basically, you focus on what you are really good at, and we focus on what basically we are really good at, and that's the single thing that we will try to help you out with. I think in crypto, most funds will operate slightly differently. I think funds, to some extent, will always try to at least portray themselves as being a value-add investor. So definitely, try to add some value to the portfolio companies you have. I think for us, the whole thesis for how we want to work with portfolio companies is typically looking at what sort of the core muscle that they have that we don't have to work out for them, and what are the things that they don't do well that we can really help out with. And I think in our portfolio and sort of our investment strategy along the way, we very often backed highly technical founders. Technical people are typically a very sort of one-size-fits-all profile as a person. So they very much excel in a few topics, and they also don't excel in a bunch of other things. And I think we always like to help build out all of basically the weaknesses and attack all of the problems that are around this sort of the core technical problem that they are solving or the competency that they have in that domain. So, very simple stuff like hiring, like raising additional funding, marketing stuff, these sorts of things. Obviously, we've, in-house, we've built a very deep technical sort of knowledge base as well around how blockchains work, and like we regularly publish research like this. But ultimately, that's only sometimes a value add, and I think the more consistent value add is very much all of these processes that are around sort of the building of the company,
growing the organization as well.
Yeah.
I would maybe just add that the first case you just mentioned, that no value add, for this kind of VCs, there's a chance to invest during bear market, because during bull market, it's like those 8-year projects, like they are oversubscribed just like that. They are pretty quickly oversubscribed, and it's just according to your value add if you are able to get into the round, right? It's a very competitive space, like being VC, especially during these times, let's say, it's quite competitive. So the more value add you are able to bring, the better it is for the project. And that's what we are also doing a lot. And we are trying to focus on what you just have mentioned. Every team is and every project is different, and some of the founders are more technical, some of them are more business development oriented, and then our role is to try to search for that weaker parts and try to help them in those weaker parts, because why should we work on something what the project and founders are great at, right? They are probably much better than we are. Our role is to help them in something what they are not good at, to connect them especially with someone who is professional in that space, because that's what all the VCs are having. They are having great network, great connections. And one more thing is that we already have seen the best cases, best scenarios, how projects and founders should operate, how they should extract the value from whatever activities they are able to do, and we just can advise them to do this. It's obviously all the time on the project if they want to do this. I think value add is very much needed from VC perspective.
Well, we just got an example from you guys, of course. So, I was interested because the questions are already coming in, I see. For those who don't know, of course, we're using slido.com. If you use the code ETHDam, you can pop in your own questions for the gentleman here. If you'd like to pitch, please do so after the session. You can find them one-on-one here around. But if you have a question about raising capital or choosing for or not for a VC, then please do. I see some early ones already coming in. Can you name one crypto meets AI application that's live and creates real value? I know you guys invested in Fetch, right? Yeah.
True. Yeah. We were early investor in Fetch AI. That's actually before we started our accelerator model, but in a very similar way, we work with them from a very early stage to becoming what they are now. I would say Fetch is one of the more advanced in the market. But clearly they're not as something like that you can point to as an OpenAI, where what's OpenAI's product? Well, it's ChatGPT. It's over there. It has an API. It's there. Fetch does have services that they offer and work with enterprise on. They have their agent toolkits. They have the Delta V format. So they do have all of those things in the market, and increasingly people are building on them. But I would say, in fact, like many other projects in the wider crypto space, it's relatively early compared to Web2 models, but definitely much more materializing now. They've definitely found fit now in beyond where they were in 2020, 21.
Rene?
Yeah, I would like to, not that long time ago, I did put one tweet that is describing this space really nicely. Don't get me wrong, but it was written like, look at the BitTensor, like they are really not solving anything right now, but they are having few hundreds of millions, and ultimately they will be able to hire the best people in the world and to find out like what they are going to be working at, right? So that's more or less actual stage of the AI and crypto, I would say. Maybe you have different opinion, but from our point of view, we have invested into Ionet and Exabits. Those were our first bets on AI. It's more like Deepin space, but we found it like the best AI bet for us.
Yeah, I think that the question is already pretty pointed in the sense that obviously a bunch of this is very fluffy and vaporware. But I do think there's some overlap of the domains of crypto and AI where I think we'll see interesting developments. I think right now, this is the lightest way in which this is somewhat fruitful. Something like an Akash, for instance, right? I don't know if you want to call it like a Deepin network, but decentralized training or decentralized inference, basically just using crypto as this sort of permissionless incentive alignment, payment layer to connect, someone that has hardware with somebody that wants hardware, right? Ultimately, boiling down what these sorts of marketplaces are, there's something there. Whether they deserve the valuations that they are currently trading at in the market now, that's I think a second question. But I think these are ultimately platforms that are already providing real world value. But first point I made, I think still stands. This is still very, very speculative, most of it. But I do think there will be some interesting developments there.
I'd like to hop on to a question which popped in. The question was, what makes a successful founder? So from your perspective, you get a lot of decks, of course, a lot of propositions. What are, in your case, green flags or red flags when looking at proposals?
I mean, I can hop into that. Because we get a lot of different founders or aspiring founders who apply. I would say mental, like your character and attitude, is ultimately one of the most important factors because, like your experience and your skills, etc., you can augment those, and people you can gather around you. But you can only gather them around you if you have, that attitude, if you have the ability to attract people, if you have the ability to word your vision, to communicate it, and be flexible and determined to, like Iris said, like this is quite common. I would, in fact, if anyone goes through our accelerator and does not have that moment of, whoa, this is really too much, I would, be a bit worried, because almost everyone goes through that. It's so much that comes at you, and the ones that are successful are the ones that, are resilient and are flexible to see, well, what comes at me is really something that that should be a pivot, that should be a big change. And this other thing that comes at me is something where I need to just overcome it and go in the same direction, and it's an obstacle I need to overcome. So that, mental flexibility and resilience, I'd say, is a really important characteristic.
I completely agree with everything what you just have said, and I think this is a very complex topic. We did like 2 months ago or something like this, published an article on our Substack where we describe like what are the points where we are looking at during our due diligence. There are many of them, but obviously the team and founders, it's the most crucial part of it, because we are investing in early stage of projects, and the team is at that point crucial, because sometimes it happens that the project vision doesn't turn out to be the best one, but the project and the team, they are able to pivot into something a little bit different, but still being very successful. But like you just mentioned, they need to be flexible enough. They, on one hand, they need to have the vision where they are heading, but then being flexible enough to listen also, because we had experience that there was a founder who didn't want to listen. He felt that he knows the best what he is doing, right? And usually it's like that, but not in every area. And when there are already more people and more VCs telling you that this can backfire to you, then you need founder to be able to listen to you, right? And that doesn't, it can be really a huge red flag. We experienced this already.
Yeah, I think in general, the biggest green flag we've seen with founders that have done really well is that they're just generally like nice people. I think when you sort of boil down what you guys mentioned, like the people that we work best with are the people that we just like working with. So I don't think there's, you know, if you're a highly technical founder, then the green flag is that he's very technical, right? And if you're a massively savvy business founder, then being massively savvy in business is like your green flag. But I think that the sort of below the surface, it's really like how likely do you want to work with this person? If we have a first call with somebody, camera off, sort of short answers, kind of, you know, uninterested, then I'm already 100% sure this is never going to work out as a relationship. So then that's the red flag. And the opposite, the green flag, I think, of all the founders that we've seen succeed is basically founders that are, you know, really nice to work with from basically all angles. Yeah, and you know, also just a founder that is willing, as you mentioned, you know, admitting that you don't know certain things, admitting that you aren't, you know, good at everything, admitting that you need help from people that you hire around you or that you collect around you. But in general, I think the main thing is actually finding, you know, just being a generally nice person to work with. I think that's honestly been the biggest success indicator for us.
Okay, thank you. We're getting quite some questions in. Let's go through. Let's take the top one. I need to raise and I don't have a company, neither a token. I'm assuming there's a product there. Many VCs and angels ask to invest, but we are stuck there. What can I do?
Well,
do you guys also support with the setup of the whole structure for investments, for instance?
Yeah, we have done this before. We've provided loans, for instance, for people to incorporate, but I don't think that's a very typical thing. An incorporation is ultimately not the biggest hurdle. So if you have a product, then you should probably build somewhat of a corporate structure around this. A token isn't a requirement, I think. Well, some VCs will see that as a requirement because obviously there's some benefits to having a token. But yeah, I mean, an investor ultimately has to wire money somewhere and get like a formal piece of ownership somewhere, whether that's a portion of a network that they purchase or, you know, a piece of equity. So if you only have a product, then I would highly recommend starting at step 0, which is maybe incorporating or something.
Yeah, that's one thing, and maybe also the important thing from our point of view is to find some lead investor, because this lead investor, they are able to help you with all this not only basic stuff, but with everything, with the valuation, with tokenomics, and with other questions. And also other VCs will be much more tempted to enter the round when there is already some lead investor who is kind of like proving the quality and that they did double check already everything.
Yeah, so for us at Outlier Ventures, this is a much more common case because we do get, like it's one of the things you asked, are you incorporated or not? And you know, in quite a few cases they aren't, but then we, you know, help them with all of that, including like where to incorporate, how to incorporate. But I agree, like you need somewhere to send the check to, and you need, you know, confidence about certain cap table and ownership that's there. So yeah, I need to help them get on the way.
There's one question which came in, which it's not the highest rated at the moment, but I would like to touch upon it. There was a question about red or green flags for founders. What are the red or green flags about VCs? If you're, as a founder, searching for support, what should you be aware of when talking with you guys?
Very much depends on what you're looking for out of your fund, I guess. If you are one of these people that are sort of hell-bent on, I have this direction in my head, I know how I want to build this company, I know where I'm going to take it, I just need money, so I need you to wire and basically fuck off, then that's the sort of VC you should be looking for. And at that point, a sort of helicopter parent VC is not going to be a great fit for you. So I think you first have to figure out what sort of fund are you looking for and what are you really looking for out of this fund. And then finding that. There's a bunch of very common sort of red flags that are like easy. If a fund is pushing you to launch a token as soon as you can without a product, I would argue that's probably not the greatest sign. And there's a bunch of very low-hanging fruit red flags. But I think really you should be focusing on like what are you actually looking for out of a fund, and who can actually offer me this.
Yeah, and so to add to that, there's a bit of an ebb and flow in the market. As right now, it's almost the founders doing DD on the VCs, whereas in bear markets it's more the VCs doing the DD on the founder, but it's always mutual. So indeed, look at and speak to others who've been funded ideally a while ago, and how was this VC, how was the relationship? What did they do? How did it work out? Were they friendly people? Were they humans? All of these things, and first and foremost, be aware that there are all those things, that there are different VCs, that one might, never respond after just wiring you money, and others might be very eager to help you. And then, go around your journey with funding your startup.
I agree basically with everything that has been said, and then there are maybe also other smaller aspects, not that maybe as important as this, but there are some VCs that are having already communities. Then maybe for your projects can be a little bit better to have a venture DAO, for example, like an investor, because there are many experts for each category. Maybe it's like you just said, you need to know your objectives.
Okay. So if you guys, there's always a chance, of course, if you guys agree, then that's fine. Then we can just continue, because we got a lot of questions coming in, actually.
Let's move on.
Yes. Would you invest in a DeFi app on a relatively small layer 1 chain?
It's a very difficult to answer question.
Yeah.
I guess maybe, but I think the first question I would ask is, why are you wanting to be on a very small L1 chain? What is this L1 chain giving you that any big L1 chain isn't giving you? Ultimately, it seems like tapping into the ecosystems of bigger L1s, where there's a lot of users, a lot of liquidity, etc. Basically onboarding users into whatever you are doing seems typically easier. If you have a great reason why you want to be on a very small L1, then I would love to hear it, and then we can sort of debate the merits of that. But in general, I would say potentially, maybe, question mark.
Yeah, we have in the past. The answer to that question is usually, well, we started 2 years ago and then it didn't look so small at that time, but now, compared to the others, the L1 is small. Ultimately, you want to see, where is this going to grow? In what way? And maybe, that startup can convince you, look, this L1 is now really small, but they're doing all these things. We realize that effectively this is a bet on this L1 too, but, invest in us and you'll grow with it. That might be a convincing case. Or it might be, well, now we will go multi-chain, but then specifically to these, because, saying, oh, we're going multi-chain, that's, also it's almost like choosing your chain is almost the same kind of consideration as choosing your VC. You're buying into an ecosystem, you're buying into, something that can support you or not be very successful. So in summary, potentially yes, but depending on the whole wider context of the potential, really.
Yeah, I completely agree. We already have invested in such projects. We already have declined such project. It completely depends.
Which top chains will you see lose interest from builders this year, from your perspective in the market?
Ones that are running out of money, maybe. No, I don't know if there's any. There's clearly, I think, a concentration, as I just mentioned, of liquidity and users around some of the bigger chains. That's just got a sort of positive, reinforcing feedback loop. So I think smaller L1s will maybe struggle, but at the same time, this is also, as Aron mentioned, there's this ebb and flow of what the market is doing. Ultimately, when crypto prices balloon by a 10x, that means that every ecosystem suddenly has 10x the amount of money to basically give away and incentivize builders with. And so in a bull market, you can see basically every chain, raising money for these like ecosystem funds and getting somewhat of a, I don't want to call it organic, but like maybe slightly inorganic ecosystem going. I think, so the question is basically which ones are going to die right now. I don't think any will die right now. And in fact, I think many will come back to life. It's more once, prices start to shrink again, as they always do, 99%, and then another 99%, which ones then are left? And then I think a bunch of the sort of, very interchangeable alt L1s will evaporate because they just, the block space that basically they sell isn't very differentiated from other block space. But I think it's more of a sort of bear market question: which ones will cease to be, rather than a question of which ones will now cease to be, because it's ultimately a function of the amount of capital that can be dispersed, I think.
We have 1 minute left.
Maybe I would just say where I would like to see it is builders going away from these chains. Like, there are still too many builders on Polkadot. I got the feeling that there are more builders than users, right? Then Cardano, obviously, and then some others, but these are two from the top of my head.
Yeah, I mean, I'm not going to add names to that, but yeah, the concept of if your only differentiation is a faster EVM, then you're in the end probably not going to make it. So I think that's one big conclusion of the whole L2 story. Like 3-4 years ago, there was only 1-2 chains that you could really build on. Now there are 5, 6, 7 that are all mature, that all allow you to roll out your own chain. So there needs to be much more behind it for people to make that commitment. And the ones that aren't, that they're probably not going to make it.
We are at time. I would like to ask each of you in one sentence, if you could give an advice to a founder in the room who wants to raise in this market right now, what would your advice be in one sentence, each of you?
I think you already gave the advice. Like, if you do have a product that is in somewhat of like a raisable state, let's say, then this is the market to do it, because it's clearly a founder's market and not a funder's market right now. It's already been mentioned a few times, but ultimately right now VCs are typically, unless you're very differentiated, they're having to scramble and scrap to basically get into funding rounds, which means that valuations are being driven up, which as a founder means you are selling a smaller portion of the company that you're ultimately going to build, and you're raising more cash for that small company, for that small portion that you're selling. So I think that's the advice, really. You have to be somewhat realistic about how these fundraising timelines work, and very opportunistically, this is the moment to raise money, granted that you have a product that, like, is in a somewhat of a raisable state.
Yeah, I completely agree that the time is now. So what you need to do is to hustle, right? Not in half a year, but hustle now. Work 7 days a week, 14 hours a day. You have like, let's say we are having 1 year of bull market, maybe a little bit longer, probably a little bit shorter. So the time will not be done. Now you need to raise money and just to talk to as many VCs as you are possible, talk to scouts, talk to people who are having access to capital, and ask for their feedbacks, ask why, and try to be pushy. And then ultimately the life and these ways will lead you to someone who will be convinced about investment in your project.
All right, those were very long one sentences. I'll try.
Yes.
Just to add to that, like, I mean, agree, like, make hay while the sun is shining. So do all of those things, but also be aware that, raising 25 million at a 200 million valuation it also comes with other sides. It comes with expectations, and it comes with a burden, and the market will change. And don't invent a token just because you have to, and because people are pushing you to. Invent a token because it makes sense in your product and your vision, and it adds value. And then now is a really good time to relay the start of realizing that vision in funding.
Thank you again, gentlemen. Give them a round of applause, guys.